Hey everyone, it's Nick with Us versus Herd. If it's your first time here of the content, hit subscribe. If you want to get notifications from when we go live Monday through Friday, 30 minutes before market open. Tap the bell. And if you want to join the UBH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're joining us this morning, you've been waiting, say what up, say good morning, how you doing? We have the S&Ps up 26, Dow. Whoa. Sorry. S&P's down. Sorry, we're used to saying that they're up on Thursdays. S&P down 25. Dow down 279. NASDAQ down 65. Sorry about that. Thursdays we're used to seeing the market green. I don't know what's going on. Carl, Keith, Hank, Jeff, Arctic Wolf, Faiz, Goldfish, Sahil, Mason. R.I.P. to me. Pray for you, man. I'll pray for you. We'll get through it together. I mean, we've all been through a lot with this market, and you know, if you're new to trading or you just started this year, you've gained about 6 years in experience in 8 weeks. So congratulations to you. Hope you still have your money. But we're gonna be moving forward. You know, we're all in this together. But right now, yeah, the S&Ps, everything's kind of dropping a little bit. There was some remarks this morning I posted in the Discord. Let's get this up in here. Basically, Trump does not want to speak with President Xi at this time. He is looking strongly at forcing Chinese companies to follow accounting rules if they want to be listed on U.S. stock exchanges. However, he has concerns that Chinese companies will move their listings to London exchanges if he forces this issue. So this kind of goes back to the trade war in 2018, where Trump was suggesting that we shouldn't have Chinese stocks on U.S. exchanges. And remember that, like Baba cratered, JD, you know, any stock that was Chinese just like went down within minutes that day. I mean, that was crazy. So be prepared. I mean, the market may not care about job numbers and may not care about coronavirus deaths anymore, and may not care about that kind of thing. But we know the market does care about our relationship with China, trade, and that is what the market is reacting to. Likely no trading for me, getting ready to head into work. If you're just joining, say what up. Hit the like button if you can. Appreciate it. So, weekly jobless claims this morning. Weekly jobless claims, 2.981 million. We're now at 36.5 million unemployed for the last 6 weeks here. 7 weeks. So they came in at 2.9. They were expecting 2.5, 2.7. Came in at 2.9. I mean, this is just astronomical. I mean, just insane that we could see this many people unemployed in a week. Like 3 million people unemployed in a week. I mean, that's a lot of people. That is a lot of people. Now we're at 36 million people unemployed. I mean, I don't even know what to say. I don't know. I mean, that's a lot of people. I mean, 36 million people not working. Now they're saying that, you know, if we get back to work, things will kind of, people get back to work, but I don't know. We'll see. We had who this morning says it could take up to 5 years before the coronavirus pandemic is under control. I mean, I don't know what that means for the U.S. jobs being on shelter in place and all that. Illinois, we're probably locked down forever. I mean, honestly, we're probably locked down for. You know, they said yesterday. Our governor said yesterday that we thought that we were gonna hit the flattening of the curve in mid-April. Then it was mid-May. Now it's looking like mid-June. So what does that mean? Are we going to be shut down through July? Probably. maybe more. But I mean, people in Illinois are struggling because we have high taxes. No one's making any money. I mean, it's a problem. But they said I would say in a 4 to 5 year time frame we could be looking at controlling this. I mean, so if there's no hope to control the coronavirus, how can we live with it? That's kind of what we need to figure out as a country, as the world. How can we live with it if we can't eliminate it? If we can't eliminate it, let's figure out how to work, how to live life with it. I mean, that's all we can really do. That's all we can do, you know? But Goldman Sachs did say they think that the Fed will think of negative interest rates, rethink negative interest rates if we hit a second wave of coronavirus. So we'll see how things are going. I mean, yeah, I agree with you, Carl. They should have a rent freeze, a mortgage freeze, a tax freeze. And that's, you know, if people aren't making money and they're like, oh, well, you got a $1,200 stimulus check. $1,200 barely covers, I mean, for most people in the area that I live in, $1,200 is your property taxes per month. Maybe your property taxes more. I know people paying $20,000, $30,000 just in property taxes a year. You know, I mean, it's $1,200 is not going to cut it, man. Not going to cut it, you know. And in different areas, I mean, you're paying in lower price areas in here, you're paying $5 to $10 grand property taxes a year in lower priced areas. So, you know, I mean, it's insane. So it's like, well, you got to pay, and then most rent, if you have, let's say, a 2-bedroom apartment in the suburbs of Chicago, it's at least $2 grand. It's at least $2 grand. So what do? You choose. The governor said it's illegal to evict people, but what does that mean when it's not? Like, you're gonna get kicked out, bro. Your credit's gonna be trashed. Like, you didn't pay your rent just because you couldn't get evicted. I mean, it's bad. It's bad. It's real bad. So I don't know where we're heading. I don't think our government officials know where we're heading. But I feel like housing is a luxury. I mean, the two things that you need in life are housing and food. And clothes you can get by on. Like, you can get by, like, you know, cutting out little loincloths out of your bed sheets, you know, you can get around with that. But food and shelter are pretty much as essential as it gets, you know. I mean, just crazy. We got a bunch of people weaving loincloths after this stream. Like, oh, I didn't even think about that. Just know that loincloths, bed sheets are thin. Just keep that in mind. Bed sheets are thin, so you know, you don't give enough room. You'll be poking all over the place. You won't be contained. You know what I mean? Like, you won't be wanting to run a mile on the treadmill in a loincloth. I'll tell you that, made out of a bed sheet. But maybe our ancestors had it right. Maybe that was the most comfortable way and most economical way to clothe yourself, you know? You asked where we're headed. The living will envy the dead. Over the next 5 years, big cities will depopulate. Maybe. I don't know. You know, I know there's a lot of people right now talking about getting out of Illinois because, I mean, you can't really afford to live here, you know? But getting into some of the stock market right now, we have Cisco. I was thinking about selling some premium in Cisco. It wasn't relatively high. Implied volatility wasn't really high in Cisco. It was only like at 100%. And I thought that because if we had a big market drop today, I may not get the big premium crush that I wanted to get out of Cisco. So Cisco did, let me pull this up here. Cisco did beat their expectations. However, revenue's down 8% from last year. They came in at 11.98 billion. Cisco's a, you know, if in the IT world, I mean, Cisco is a main player. However, it's more kind of like an IBM, Intel, kind of like an aging dinosaur that is not really conforming to market trends. They're just supplying the need, and that's kind of where Cisco's at. So I thought maybe a neutral strategy on Cisco would have been good, and I think that definitely would have turned out okay. You know, it's only up 50 cents right now, so we probably would have got some premium crush in there, but I didn't want to take the chance because of the market looking like it was headed down in a rough patch, you know. Now, other plays that I have in, I'm short Apple. I have a debit spread for June expiration. Let me pull this up real quick here. I currently have a debit spread on Apple. I'm in June. I bought the 310 put and I sold the 295 put. So it's a debit spread on that. And really what I was actually just looking for it to come down to the 300 area. It looks like it might tap down to 300 today. I wasn't really expecting it to tap 303, 304 area yesterday, and it just sold off from 315 down to 303. It was just crazy. But I'm looking for Apple to really revisit this 300 area right in here, see if it wants to test this or if it just wants to slice right through. So, you know, we'll see what happens with that. I'm also short Home Depot. Home Depot, I have another debit spread on right now. I have the what do I have on Home Depot? I'm long the 230 put, and I'm short the 210 put for June as well. So for June I am long the 310 put, long the 230 put, short the 210 put. Man, I'm having a rough day this morning. So the biggest risk here, like Alex, what I was saying is that I thought they came up a little bit high up in here. I'm looking for it to come down to the 220 area. However, the biggest risk on Home Depot is they have earnings next week. I thought they ran quite a bit here, so I was trying to get a little bit of a pullback here. But they have earnings next week, so I don't know if people are going to try to exit before earnings or they're going to pile in before earnings. So that's kind of the risk with Home Depot right now. So I'm looking just to hit some targets. I may actually hit my targets today if it can come down to it already came down to 225 area. I definitely would be happy with 225, 222 on Home Depot to take this trade off and probably wait till after earnings. I mean, I think that the earnings, kind of like the other retail stores like Target and all that, I think their earnings are going to be good. However, I think their profits are going to be offset by the extra spending for the coronavirus, extra cleaning, extra labor. So that's kind of where I see Home Depot right now is, yeah, they're gonna be doing fine, but like Amazon and Target and Walmart is like, oh yeah, our profit kind of got evaporated due to we have more labor costs, we have more cleaning costs, we have to we have to buy a bunch more cleaning supplies. I mean, we have to pay more people to do it. So it's not like it was before, you know. The good news is, I guess, more people are being employed, doing more jobs in that industry. But I mean, the thing is, they don't really get paid enough, I don't think, to be on the front lines of coronavirus and working a retail store. I mean, it's just crazy. So those are my two main plays right now. I'm also long VXX. VXX I'm long. Looks like it's pushing up. VXX is pushing back up. Hit 42 this morning as well. Pulling back a little bit right now as the market bounces. S&P's has bounced back about 50 points since I started talking this morning. So if you're just joining, say what up. Hit the like button. I'd appreciate it. But this morning is it's gonna be. I think we're gonna have some very interesting price action. We don't really have. Let's see here. I mean, we got Applied Materials. We have Applied Materials earnings after hours, and then I'm gonna be maybe looking for a position in JD and DraftKings for earnings. Right now, DraftKings premium is rich, so I might be looking to sell some premium in there. But I have no idea what DraftKings is going to do. We made some money on it. We made 40% on it yesterday on DraftKings after holding it for about 3 weeks. So I have no idea what DraftKings is going to report on. I think that there are going to be sports starting back up. You know, the NFL, I don't know what they're doing with the NBA right now. The NBA is like, you got people wanting to start back up. You got people wanting to cancel. I don't know what they want to do. Baseball starting back up. So DraftKings, if sports are in play, DraftKings is in business. With or without fans in the stands, DraftKings can operate without fans in the stands. They just need the sport to be played. If the sport can be played, DraftKings is probably going to be doing all right. So that's what I'm looking at right now for today going into tomorrow. Now, you guys are saying RVLV. Is this some penny stock? Just kidding. Revolve Group. Yeah, I mean, it looks like, what was it at right now? 16. So yeah, it's breaking out. Definitely could run the 2021 area. So definitely breaking out of the range here. It's been sitting at the bottom and is pushing up. What do they have, earnings today? Yeah, so they had earnings. So hopefully it can. Right now it's fading down a little bit. So hopefully it can definitely hold that and can break out of this range. Otherwise it could fade back to like the 10 area. So you want to be careful. Maybe put a strangle on after some premium crush if they have going to June. Open interest isn't. You could put a pretty decent strangle on here. I mean, wow. These were at 163% for June, 368% for May. That's some high premiums. But it did move $2. Expected move for this week was $3, so it didn't quite get there. So maybe sell some maybe put once we get some premium crush, buy a strangle on RVLV. Not a bad play. Yo, J Cam, what's going on? You guys are kind of quiet this morning. What other stocks you guys? What other stocks you guys are looking at? I kind of ran through my spiel a little bit. Oh, I'm also. Let's see here. Whoa. Tesla. I'm looking at Tesla. So Tesla is relatively strong. You know, it's down $25, but let's see. I want to see what happens down at like the 775 area. DocuSign holding up relatively well. So the things that I've been looking at that hold up, if you're looking to buy calls, what I've been trading calls on, DocuSign and Zoom. So DocuSign and Zoom and Netflix. So DocuSign, Zoom. DocuSign's holding up really well. I mean, it did get pummeled from 124 to 118 yesterday. Currently sitting at 118, but you know this thing has literally gone from like 110 to 124 in the last week. You know, it was insane. Zoom is holding up pretty well right now in the market sell-off as well. So Zoom, I'm looking at this as well. Zoom is pushing up, so they had a nice dip to 160, came back up to 167. So the thing with DocuSign and Zoom is you just don't know if like that's the dip to buy, or you're gonna get your face ripped off, or you know, like this is I was watching this like a couple days, and these are look at these charts. Pretty much DocuSign and Zoom pretty much the same. Look, dump at open on Zoom, recover. Look at yesterday or the day before. DocuSign dump at open, recover quickly, and then we had a ramp up of Zoom and DocuSign yesterday morning, extreme selling, and then recovery. You know, so Zoom and DocuSign seem to follow a similar pattern, but I guess I get a little bit scared trying to buy these dips. You know, trying to buy these dips because they happen so quick. I mean, this thing hit 159 and bounced back up. This is a 15-minute chart. Within the same 15 minutes, 159 to 163. You know, if we bring up the 5-minute. 5-minute shows a little bit better of a pivot here. You know, it shows a little bit of a better pivot, but it's kind of scary when everything's selling off and you're trying to catch the knife, you know. CODX. Alta for earnings looks like we missed the short boat. I don't know. Alta's been closed, right? I think the short boat. I think this is confirmation that you could short it. The problem with Alta, Hank. I mean, I like trading Alta. The problem with Alta. I mean, I've made a lot of money on Alta over the last few years because It just does what it does, and it's a very strong retail shop. But the options are hard to trade. They're like illiquid. So it's good. I like to trade it. I make money on it. But if you're new to options, it may not be for you. It may not be for you. Yo, Ariana, what's going on? Nate, we're doing. But yeah, let's look at Mason. You bought the XLE call yesterday in the dip, kind of long play. So XLE, yeah, all energy, financials, everything was going down yesterday, still going down. And like I was saying in the Discord yesterday, like be careful. This was a market-wide sell-off yesterday. The market, the whole market as a whole was selling off. It wasn't just like one sector. You know, we've been watching, or at least I've been watching, but I've been mentioning it on the stream, is the banks. The banks were leading the charge. The banks have been red like pretty much every day the last 4 days. And I'm like, this doesn't look right. The banks have been selling off pretty hard. JP Morgan itself, like JP Morgan, has been declining. Look at this. It's 4 red days in a row. It's down even more. 5 red days in a row. It broke the trend here. And I'm like thinking to myself, okay, the banks, financials, everything is kind of going bad. Banks, but the JP Morgan, Bank of America, Visa looks a little bit better. However, it has had 3 red days in a row. But the banks were, JP Morgan, Bank of America especially, broke the uptrend that they were in this week. And I was kind of thinking to myself, okay, now financials are struggling, the market's still going up. If tech begins to sell off, we're gonna see some problems, and that's what happened. Apple at the top of its range up here started selling off a little bit, and the market started dipping. And that same thing for like XLE. XLE is the trend is still intact, but it's not looking good. If it breaks 34.90, this trend is going to be broken here, and we're gonna have some trouble. We're gonna have some trouble like on XLE, the energy sector. We're having trouble on like XLF, financial sector. XLF trend is broken already. XLE, there is some hope. There is some hope on XLE, Mason, but XLE, we gotta be careful about this area. This is what I'd be watching. This is what I'd be watching right here is the 34.85 area right in here. If it breaks this is gonna break the trend here, and we're gonna have some trouble. If you only had $100 in your account this morning, what option would you trade? If you only have $100, you shouldn't trade options. Buy some stock or short some stock or something like that. But actually, I don't think you can even short stock with $100 because of margin. I think that you need to save up to at least get like a couple $1,000s. To be honest with you, this channel, for the people that haven't been on this channel or watching this channel is about making repetitive income. It's not looking to turn $100 into $10,000. It's not looking like it. We're here to make $300, $500, $1,000 a day repetitively and have your P&L going up slowly but surely. I'm not looking to have giant rips and dips in my P&L. I am looking at a constant upstream. Sure, we have red days and we have red weeks, but we recover and we bounce back, and the losses aren't anything extreme. The losses we can bounce back of. The what I risk on a daily basis is no more than 1 day's worth of profit. So, worst case, I lose a day. If I have 2 losing days, I lose 2 days, and then I bounce back and we recover, and that's just the way it is. You're gonna have red days. You just don't always know which day you're gonna mess up on. You always think you're right. You always think that positions you put on are good. Otherwise, you probably wouldn't have put them on. Sometimes you do. Sometimes you do put on a position like, probably should. Probably just probably gambling a little bit. Probably shouldn't do that. But essentially, what this channel is about is just maintaining your ground, because the market is trying to take your account to zero. The market wants you to go to zero. Do you want to go to zero? No. So what you need to do is have the ammunition to fight the battle. We're at war constantly with the market, hemming and hawing, trying to eat away at your portfolio. And if you don't protect that, and you can't protect that, your balance is going to go to zero, and you can't. If you're at a zero balance, you lost. And that's something that we're trying not to do here. Buy $100 in Bitcoin or something. My XLF put, I got March may come back from the dead. Lesson here, never be a bag holder. Yeah, learn how to cut losses. It's okay. It's okay to cut losses. CODX. Let me go to CODX. You guys are mentioning here, and I'll look at some of these. I mean, this is just, yeah. I mean, I don't even know how to trade this. You know, like this is just pure speculation. So if you like we were talking about yesterday, there's a lot of pharma stocks that look exactly like this, and if you want to hop on, then just hop on. But know that at any minute this thing could fall apart and rip you to pieces. And if that's the kind of trade that you like to go in on, go ahead. Oliver, we did cover RVLV, GM. So, I mean, GM is maintaining, right now it's at 20, is maintaining this uptrend. So, if it breaks here, this is going to be big trouble. If it breaks 20, I mean, GM definitely going to see 18. Now, when I say definitely, it's not investment advice. That's just the way I see it on the chart. Yeah, I don't like CODX. I don't really like trading those overhyped companies. I mean, it goes from 69 cents to 20 bucks. If you weren't in on the initial run, like why chase it now, you know? And I make enough money. I make enough money trading Apple options and all these other stocks. Like I don't need to be in on a penny stock that turned from 20 cents to $100. I don't need that. Roku. Yeah, let's take a look here. NAT2, Craig. Roku, NAT. Roku, yeah, Roku's bouncing a little bit here at 115. But it looks to be dangerous. I mean, it likes this area of 120, but it's definitely a dangerous chart here. Very dangerous. So if you're making money on Roku, congrats, because this is gonna be a little bit choppy. And it's hard to say if this is going to go lower or not. NAT. Yeah, so this is a company that everyone was talking about when the oil supply, shipping containers and all that stuff. You know, NAT. I mean, it looks like it's leveling out here, but it's looking like it's leveling out around 490 area. But it has come down quite a bit. If it can level out here, it might return back up to like 6 or 7. But again, you're kind of playing with fire here. Yo, Steve, what's up? Netflix got a upgrade. Let's take a look. Market's opening. I do like to trade Netflix. I mean, yeah, Netflix is pumping up to where it was. I mean, that was one of the things that turned me off from day trading yesterday. Was this kind of price action. I mean, it was huge, but it was really, really dangerous. You know, it was really dangerous. Now, in retrospect, it looks like it pretty much a slam dunk to short. You know, a $20 swing from high to low. I mean, it's pretty beautiful, but it was a crazy sell-off, and it was very dangerous. So I didn't make as much money as I thought I was going to yesterday, but. I didn't put myself in a position to really stress. So now it's pumping back up. So Netflix is one that you like. For me, for instance, is a stock that I prefer just to buy the dip on than short it. I mean, yes, there's action on both sides, but it's coming up on resistance here at like 445, 449 area, and it got rejected yesterday at 447 before that major sell-off. The question is, if we didn't have that market-wide sell-off yesterday, would it be pushing back up? You know, it's hard to say. It looks like it wants to go back up. I mean, it came back and recovered from 227 to 438. It's right now 444. So definitely Netflix looks good for a day trade. Zoom, DocuSign, and Netflix have been relatively good to day trade. Apple, now that it's moving, is good to day trade as well. You know, we just need to day trade. We need stocks that are moving. We need stocks that are moving. All right, market is opening up here in just a couple seconds, so let's see what happens. Market's trying to bounce up a little bit right now since, I mean, not great. So I'm in Apple, Home Depot. Oof. All right, so Apple's trying to bounce up a little bit. Let's see what the market wants to do. So I'm up pretty decent this morning. I'm up 302 on that VXX call. I need some options traded. I'm up more than 24 bucks on Home Depot. I need some options traded. Home Depot's not as liquid, so we'll see. I'm up a little bit on Apple as well, up 28%. I'm up 125% on the VXX call that I have, and we need some more options to be traded on Home Depot to figure out what that's going to do. So we'll see. We'll see what happens. Kind of a slow open right now. Let's see what VXX. See if I should cut my VXX call here. Take in some profits, redeploy them. You know, I think that's what I'll do. I'm gonna take in some profits on this VXX call, and then redeploy. I can get out of here. All right, so I just got out. So I got out of VXX with a 277 profit. So now if I want to buy calls, my protection's kind of gone. I am short Apple and Home Depot still, so I'm still short there. But my call really ripped. I mean, it was up 125% on VXX, was pretty crazy. So we'll take that money in. We'll start thinking about where to redeploy that. Some, VXX is falling down a little bit. The market's trying to recover some right now. DocuSign's pushing back up. Let's see, ZM. Man, Zoom at 170. Holy cow. Netflix 449, weekly high. All right, so we want to be careful here. We want to be careful. But yeah, we had a nice pop on VXX, made a little bit of money. That was nice. Home Depot, as you can see now, Home Depot is moving up, but as you can see, some contracts are starting to be traded, so my position's increasing in price. So I'm up 78 bucks here. Probably up a little bit more than that, so we'll see what happens. There's not a whole lot of volume. I'm in June. And as you can see here, June, like there's only 27 volume on the 230 and only 3 volume on the 210. So bid and ask is a little bit wide. So we need to tighten up a little bit. And that's kind of what I look for when you're trying to when you're trading illiquid options. You want to wait for some contracts to get traded to determine the price. You don't want to just go in. You're gonna get ripped off. So I'm gonna be chilling. Let's see, Apple's coming down a little bit as well. Man, Netflix really ripped. I wonder how many people are going to try to short that. Not saying that's not the right idea. Maybe it is the right idea, because Netflix right now, 449, coming up on resistance. But if it busts through here, it's going to be real big trouble for shorts. I mean, this could definitely go 500. Craig, SGen. But right now the market is holding right now. Yeah, I mean this is looking like it's starting to break trend right now to the downside. So I would be careful if you're trying to go long. Looks like it wants to break to the downside. Probably wants to revisit like the 140 area. Google just made some integration moves with Google Meet and Gmail. Major competitor for Zoom, and Google Meet offering free 100 people meetings. I wouldn't go long Zoom. Yeah. I don't know. I mean, Facebook is trying to take from Zoom. Google's trying to take from Zoom. But Zoom is like now that it's deployed to so many people, Zoom is like the Netflix to Hulu. You know, I mean, it's like comparing it. It's like Netflix is Netflix, mainstream brand. Zoom is Zoom. Zoom is what got this on track. I mean, I know like WebEx and all that stuff but what made it popular was Zoom. Zoom made it popular. So I feel like there's always going to be like, unless Zoom does something terrible, and they have, I mean, with the encryption and all that, which they're rolling things out, Zoom is going to be a top tier brand name. So people like in the office that now the buzzword, like back in the day, remember how like everyone was talking about like, oh, I want to get in the cloud, I want to do the cloud, I want to do this in the cloud. Everyone's like, now people in the corporate America are gonna be, hey, are you on Zoom? Are you on Zoom? Are you on Zoom? And they think that they're when they talk like that, they think that they're smart. Essentially, even though, I mean, we've had the cloud for many years before it got popular. They just branded it the cloud, and now Zoom is out and big in the corporate world. It's easy to deploy. It's easy to manage, and it's easy for people to understand. So I would, that's the only thing I think that they have. I'm not disagreeing with you, Christopher. Maybe Google's a strong competitor. People move over to that, but I mean, so far, Google hasn't been doing that well in that arena, like their cloud platform. AWS has outpaced them, even Microsoft Azure. I mean, Google the Google Cloud platform in general is in third place, behind Microsoft and Amazon. And I mean, they're still doing their thing in search, but other things outside of search they struggle with, Yeah, it's like how Xerox became. Yeah, it's like, oh, how can I get? We don't call like disinfectant. We're like, hey, can I get the Lysol? Or like, hey, can I get the Windex? Or hey, you want to Xerox me a piece of paper? It's not like, can I copy it? Can you Xerox this for me for a second? Excuse me. So I think Zoom has that, which is why I would be scared. I'm not holding any stock long term on Zoom or anything, but trading the options, I find it way easier to buy the dip than short the rip on Zoom. If you short Zoom, you have to be quick. Yeah, Roku's moving back up to 120 area. Market's trying to recover. Gold is up quite a bit too. Gold is pushing up pretty nice. If you look at this, it's up. It's been holding the 1700 here, and it's pushing up pretty good. So we do have some green stocks. I mean, Apple is trying to go green. Microsoft is trying to go green. Nvidia is already green. Nvidia is up $4 right now. Tesla's green. It's recovered its $25 loss or so, $15 loss. Beyond is green. Beyond is pushing up. Made some money on Beyond yesterday. Thankfully, I got out of that, but I'm a little bit worried that this sell-off isn't over. So I'm not trying to get too long right now. I'm just trying to watch, wait, and see. Right now I'm chilling. Amazon is green, of course. Stocks are holding up relatively well right now, especially tech. If we're looking at Microsoft. Microsoft's only down $1. It's holding nice, but we'll see. We'll see if they can handle this after open. Like what's this afternoon gonna bring? So for me, I'm pretty much just waiting and seeing what's gonna happen, because I mean, after yesterday, you want to be careful. Yeah, JP Morgan's climbing back up. It's still below where it needs to be, but it could definitely bounce here. If it could bounce here, start to recover back up to the 90s would be nice, but looking dangerous. DocuSign ripped up $3. How do you toggle so quickly with your watch list and see the chart? I have to type in the ticker. So you can link your watch list or any watch list to your chart. So here you see I have a 1 here. You can unlink it. Like if I unlink it, if I click on this, it won't be linked, but I can link it. You can link it by hitting the chain here. Hit the link. Hit like a 1, 2, 3, whatever you want to do. So this is linked to 1, and as you can see here, my watch list is linked. You can unlink your watch list as well, but it's linked to a chart. You can link your watch list to a chart. So if I click on Tesla, it'll link this. Now if I unlink this and I click on, let's say, VIX, see, it doesn't change. But if I link it again, I change it back. Now it's linked to whatever I click on over here. So it helps me with my videos, and also helps me with just overall speed in the platform. So you can link your charts, and you can actually have multiple watch lists linked to multiple different charts. And I also link this chart with my 1 year. So whatever my main chart here, whatever I'm looking at my watch list, I also toggle back and forth. So on this one also, so if I click on Microsoft, it changes this chart. It also changes this chart here. So that way I can go back and forth, and say, okay, because a lot of times what I'll do, like, I'll compare the intraday chart with the 1 year chart, and so I toggle back and forth. So I should probably do some more videos on like how to use the actual platforms and how I use it, and it definitely speeds you up, because if you're like, oh, I need to look at SPY, have to type it in, you know, it gets kind of cumbersome. So I just get away from that. I just toggle my watch list and just click on linking it and toggling back and forth. DAL, Delta, how low will Delta go? Who was it that put out news this morning? Was it Delta that they're retiring their entire Boeing 777 line? Was it Delta, or was it another airlines? Oh, it was Delta. Here. Delta to retire Boeing 777, seek to burn zero cash by end of 2020. So they're trying to eliminate his daily cash burn by the end of the year, which, I mean, that's a long way to go. I mean, we're in the 5th month of 2020. We're not even halfway done. It says Delta's reached its goal to have its daily cash burn in the second quarter to $50 million. So they're burning $50 million a day. The carrier is retiring its Boeing 777 fleet, a sign that it doesn't expect international long-haul travel to return quickly. Our principal financial goal for 2020 is to reduce our cash burn to zero by the end of the year, which will mean for the next 2 to 3 years a smaller network fleet and operation in response to substantially reduced customer demand. He said he said more fuel efficient and cost effective A330s and A350-900 planes made by Airbus will be used instead. So probably another hit to Boeing, guys. Another hit to Boeing. You know, they're going to be going with Airbus over Boeing. Another hit. And there it is. I don't know what it doesn't say. Christopher doesn't say. It says, with international travel expected to return slowly, we've also made the difficult decision to permanently retire our Boeing 777's fleet, 18 aircraft by the end of the year. Retiring a fleet as iconic as the 777 is not an easy decision. I know it has a direct impact on many of you who fly, crew, and service these jets. Doesn't say what they're going to be doing with them. I'm guessing they're probably going to sell them, right? But I mean what use if they said permanently going to retire? It's not like they're going to let them chill. They said permanently retire. Well, I guess I could have cut that VXX, but I want to take in some money this morning. So, you know, Boeing is struggling. DAL. I mean, DAL 52-week low today. Airlines are hitting 52-week lows right now. What's Boeing at? Well, Boeing's got a little bit to get there. UAL. Now, American Airlines, they said that they're going to potentially file bankruptcy soon. I mean, that was just kind of a rumor, so take that with a grain of salt. But they're saying that American Airlines may be preparing for bankruptcy, which is just like crazy. They should reconfigure run packages for Amazon. I don't know what kind of airplanes. Does anyone know what kind of airplanes Amazon uses? Let's see here. Let's see if I can Google it. It says airlines, Amazon Air uses the Boeing 737 and Boeing 767. So last June they bought 15 Boeing 737s, they bought 15 Boeing 737 to 800 models, so anywhere between 737. So they might have some 777s as well. Maybe Amazon will buy them from them. Yeah, who knows? But looks like Amazon is using Boeing for their planes for Amazon Air for their Prime. So, anyways, guys, been fun hanging out. Market's moving kind of slow right now, so we'll see what happens. But airlines taking a beating. Market overall is taking a beating, except for tech. Tech's holding up still, except for Apple. Apple's doing pretty poor. So I'll be in the Discord. If you guys want to hit me up, I'll be around. Stay safe. Stay green. It's us versus herd.